British stock markets rose on Wednesday, despite continued volatile energy prices due to concerns that the U.S. and Israeli war with Iran could drag on. In London, the FTSE 100 rose slightly, as did markets in Germany and France, in contrast to Asian stocks, which fell for a third straight day. Oil prices rose more than 1% to around $83.50 per barrel, after the Saudi Arabian Ministry of Defense reported an attempted drone attack on the Ras Tanura refinery, the second such attack this week. David Miles, a committee member at the Office for Budget Responsibility, an independent government forecaster, said that if oil and gas prices remain high, this will lead to higher inflation in the UK. However, he stressed that it is important to note that the rise in infection rates is nowhere near as significant as the one seen after Russia began its full-scale invasion of Ukraine 4 years ago. If prices remain at current levels, we're likely to see an impact on UK prices of around 1%, Miles said. Brent crude oil prices have jumped 15% since Israel and the U.S. began bombing Iran on Saturday, with Tehran retaliating with attacks on neighboring Arab countries. Concurrently, one of the world's largest producers, state-owned Qatar Energy, suspended liquefied natural gas (LNG) production. Gas prices remained volatile on Wednesday, hovering around 127 pence by midday, down from Tuesday's high of 170 pence. About a fifth of the world's oil and gas supplies typically pass through the Strait of Hormuz, a narrow waterway between Iran and the United Arab Emirates, UAE. However, shipping traffic through the Strait of Hormuz has almost completely ceased following Iran's threats to set ships on fire. According to Lloyd's List Intelligence, approximately 200 tankers are effectively blocked, and insurance premiums, particularly for vessels believed to be at risk, have surged. American, British, or Israeli have risen significantly. On Tuesday, President Donald Trump said the U.S. would provide risk insurance at a very reasonable price, and would use the Navy to protect oil tankers if necessary. However, experts warned that his assurances may not be enough to allay companies' concerns, and the president did not specify how exactly escorts through the strait would be organized. Lindsay James, an investment strategist at asset management firm Quilter, told the BBC that she believes markets have taken an optimistic stance on the situation, as Iran is in fact well equipped to repel any vessels using the strait. Shipping companies, insurers, crew members will probably be reluctant to do this. It's not entirely realistic to think this will be the solution to restarting energy supplies, she said. The solution is a peace agreement, and that seems a long way off. U.S. Treasury Secretary Scott Bessent said on Wednesday that crude oil markets are very well supplied. Following the U.S. and Israeli attack on Iran over the weekend, stock markets fell sharply, with many Asian stock markets particularly hard hit, as the region imports large volumes of energy from the Middle East. Stock markets in South Korea and Thailand were forced to temporarily halt trading after falling more than 8% and triggering so-called circuit breakers designed to prevent panic selling. James Hosey, an oil and gas equity analyst at Shore Capital, said approximately 80% of Qatar's LNG is shipped to Asian markets. These consumers will now raise prices for LNG cargoes to secure alternative supply sources, as is already being seen with the sharp rise in LNG prices in Asia, he said. This obviously has an indirect impact on gas prices in other countries, including the UK, where LNG helps balance supply and demand.